All right, good morning, everyone. Happy Wednesday. Happy Fed Day. National Jerome Powell Day. Hey, good morning, Tony. Good morning, Lorna. Good morning, Briggs. Good morning, Art. All right, guys, it is Fed Day, so my biggest piece of advice, number one piece of advice, if you're long, if you're short, if you're going to hold any risk into the announcement, I think best case scenario, accept the max loss. You want to avoid the self-inflicted pain. So if I go put my entire account, and I'm a little tempted, but if I go put my entire account in Netflix and then JP comes out and he tanks the market, it's going to be very painful. But it's also self-inflicted pain. If I put, 1, 2, 3% of my account in Netflix and then JP takes down the market, it might sting a little bit, but not going to crush me. So be mindful of your risk, and then just accept the fact everything could change this afternoon. Into the Fed, I think most things look pretty bullish here. We've got a positive score on all the indexes. S&P's got a 50, QQQ a 36. And then every sector is positive. Energy actually goes green. The SMH, a 3 out of 60. I think a pretty big part of the market. That could be a lot better. XLK gets a 30. And then my little watch list, the Big 14, that gets a 37. A lot of green. And then from the Big 14, I don't think I'll be in a big rush to buy Apple. I don't think I'll be in a big rush to buy some NVIDIA. But if the market goes higher after Powell today, give me some more Netflix, maybe some Meta, some Amazon, Microsoft. Into the Fed, I think a lot to like. So between now and, call it 2 o'clock this afternoon, I'm not going to read too much into any of the price action. At a minimum, if anything, can the S&Ps hold the hourly 21? That's all I'm asking for, folks. Go into the Fed in a 1 hour squeeze above the hourly 21. From there, of course, the market could just fall apart. Or the bulls might take that hourly squeeze for a push higher. And then the Qs, the almighty QQQ, pretty similar. Meanders back to a 21 EMA. You've got the squeeze. Maybe a little chop here before Powell. Then for better or worse, bullish or bearish after the announcement, they might take that 1 hour squeeze and then get that directional move going. So I think best case scenario, they just kind of hold it here. Alrighty, but for a few names off the watch list, and as we saw, Netflix number 1, Meta number 2, and then some Amazon, Microsoft, Broadcom, and some Tesla. And we've got some Netflix and some Tesla. So for Netflix, strongest name on the board, and I think the best setup. None of that means Netflix has to work, but I like the odds here. Really clean daily squeeze. Got the buy signal, the perfect score 12, and the white dot. We had the white dot on the 4 hour squeeze. That already fired. And then let me go check the 1 hour. They haven't fired the 1 hour just yet. We got the white dot on that one. And then the 15-minute. Little 15-minute squeeze action. I think maybe more importantly, they got a good close above the $700 call wall. Now your 15-minute squeeze, 1 hour squeeze, daily squeeze. If they take Netflix back below 700, I think in the short term, it's all it's good for nothing. Good looking setup. You got buy signals. Visually, it's a beaut. If they can't hold the call wall, I don't think you're getting that big push higher. If they can hold it above that 700 and, get through the Fed first, get a good reaction in the market, I think they take the 15-minute, 1 hour daily squeeze. And at a minimum, I think you play for a push towards 720, 735-ish. So we've got the 725, 750 call debit spreads for next week. Best case scenario, Little pop pushing through 720, 725-ish. Should be good for maybe a double. So we got some Netflix, and then we also got some Tesla. Gave back a little bit of the earlier gains from yesterday, and I think a lot like Netflix at 700. Not too much of any good's going to happen here for Tesla until they're getting it through that 230. And I don't think getting it through 230 on an intraday basis, I don't think that's good enough. One pop, two pop, 3, 4, 5, 6 different times they take it through 230, and then they close it right back below it. To its benefit, I think a pretty clean 4-hour squeeze. Ultimately, I think it comes down to the market. S&P's and QQQ first. If the reaction to Pavel is bullish, it maybe not immediately today, but you got Thursday, you got Friday, through 230, I think they take the 4-hour squeeze, fire that bad boy to the upside. We've got a 225 put credit spread. Granted, not as sexy as a 240 out the money call, but put credit spread, a little more forgiving, can give that 4-hour squeeze a little more time to work. Tesla through 230, and then Meta. These are my top 3. The one they call Meta. So on the daily squeeze, we got the fresh white dot. And pretty simple, until you lose the white dot, the odds favor they take that squeeze, fire that to the upside. From there, you're playing for a push towards 550, 560. But here, my friends, is where the plot thickens. They've got the slingshot squeeze on the 3-day time frame. And of course, a 3-day squeeze, when it fires, it can pack a bigger punch than a daily squeeze. When you've got them both at the same time, some good things can happen. But we got to get that MACD cross. Really bullish structure. Stacked EMAs, 21 above the 50. I think a really good trend. Got to get a little wind at their back. So if they can take the MACD, pull that back through 0, then I think the odds really favor squeeze fires to the upside. Then the plot thickens a bit more. If they fire the daily squeeze, if they fire the 3-day squeeze, then I think a decent chance they go ahead and they fire the weekly squeeze. What is a weekly squeeze lacking? In comparison to this weekly squeeze, momentum. MACD above 0 takes a squeeze higher. MACD below 0, it's a glorified chop fest. So I think into October, November, December, in a good market, a lot of potential there for the big meta. Folks in the essentials room, can y'all see my charts? All looks good on my end. Okay, cool. Cedar, if anything, maybe do a quick reload. But all right, beautiful people. Netflix, Meta, and Tesla. Those are my top 3. If Pavel is grumpy today and he takes a market down, I don't think any of them work. So like I mentioned, if you're long Meta, long Netflix, or maybe you're short Meta, short Netflix, be mindful of your risk. I wouldn't go bet in the ranch ahead of Pavel. Perhaps after Pavel. But all right, y'all, that's the bulk of what I got for you. Couple more things. A little bit outside of my watch list. Check out the IWM on the weekly. And notice, we've had a weekly squeeze since all the way back here in April. This is the first candle where the indicator prints the white dot. Meaning you've had a weekly squeeze. For the first time since April, it's finally an A+ setup. In plain English, the odds finally favor. They really want to take that weekly squeeze. fire that to the upside, potentially kicking off a path towards 240-ish. Not to say they have to do that, but now I think they got their best chance. And then a little squeeze action for the Dow. The Dow not to be outdone. Really clean daily squeeze. I'd rather buy it a little closer to 410, but clean nonetheless. And then a 1 hour on the Dow. Then, if anything, go look at the RSP. The 500 names from the S&Ps, and they're all equal. RSP's pretty damn bullish. Squeeze buy signal, the perfect score of 12. Could all change today, but we'll take it minute by minute, see what we're working with. Maybe find a few spots to put some cash to work. But all right, y'all, any questions, anything you want to take a look at, drop it in the chat. I've got you covered. And then for those of you in my room, I will see you at 8:20 Central. Now, personally, my expectations for the open in the early part of the afternoon, they're not the highest. Could be wrong. We might get a huge pump. We might get a big dumper. I'm thinking maybe a little more quiet. Little anticipation being built up. But yeah, Andrew, IWM, it's an interesting one. And I think bigger picture, mainly off that weekly squeeze. Out of curiosity, no 2-day squeeze, no 3-day squeeze. Yeah, so the big boy would be the weekly. And for now, what the white dot tells us is, all throughout April, all throughout May, June, July, August, into September, something's been missing. Or it might be a structure thing, might be a momentum thing. There's been some part of the equation missing. And now we finally trigger the white dot. Meaning probabilities now point towards weekly squeeze has its best chance, since April to get the job done. The almighty Russell. Yeah, Andrew, there's not too many A plus squeezes, but what I am seeing are a lot of things that could quickly become A plus. I think the poster child, or one of them, would be Meta on the weekly. Yeah, they tried back there. They're trying again. We're not there quite yet. But we're only one MACD shift away from being there. You have an S&Ps on the 3-day squeeze. Not quite perfect yet, but who knows? Maybe 4, 8, 10 weeks down the road, maybe it is perfect. So I agree with you. There's only a handful of things that have the full shebang. But then I think a lot more things that might want to get there. The fun part is finding out. Hey, Jeff, can I check KKR? Absolutely. Yeah, nice push off the 21. So, Jeff, out of curiosity, are you long KKR or are you looking to get long the KKR? Okay, you're looking to get long. So, the way I would look at it from here is, if my focus is at daily squeeze, Then as far as my entries, exit, and my risk reward, I'm going to anchor to two different targets. My profit target would be about 131. A good three average true range moves above the buy zone. My line in the sand would then be that 21 EMA. And that's how I tend to trade most squeezes. It could be a 15-minute, could be a weekly squeeze. If I get the buy signal, I got the white dot. I want to play for the push away from that 21 towards my 3 ATR target. My entry between those two levels, that dictates my risk reward. Think in terms of the equity. If I'm just going to buy shares here, I jump in today, I buy the daily squeeze at $1.28. From there, based on my target, what's my reward? I pick it up at $1.28. I might catch another $2, maybe $3. So my reward plus $3. And then from there, if that daily 21 EMA is going to be my line in the sand, that's all the way down there at $1.20. Meaning I like the setup until they break that 120. If I buy it up here, I can catch $3 in my favor, or I might have to sit through a pullback down to my 21 EMA, right, to the tune of about $8. It's a terrible 8. But that's on the equity. I buy 100 shares this morning. I'm risking $3. I'm risking $8 to potentially make 3. Now factor in the options dynamic. I think a lot of us are trading these through the options. Now we're fighting time till expiration. We're fighting premium decay. Pull back to a 21 EMA. Not as simple, not as straightforward as an $8 pullback. That might cut your calls in half. It might take your calls down to 0. Now compare that instead to, say, a Netflix. Netflix gets a white dot. Best case scenario, where's the absolute best entry? Right on top of that 21 EMA. I can buy it at 680. I can dump it at 670, risking $10 to catch potentially a $50 move. If the squeeze fires, takes price towards that 3 ATR. Now I want y'all to step back. Think about the difference between those two entries over the course of 100 trades. I'm either risking 10 to make 50, or I'm risking 8 to make 2 or 3. I can be profitable with both. One of them requires a really, really, really good win rate. The other one, you can be profitable with a 40, 50% win rate. In other words, if I'm buying KKR up here, as far as my size, as far as my time till expiration, I'm going to structure that trade in a fashion where if we do pull back towards that 121, 120-ish, it's not going to be the end of the world. I'm not going to go put 20% of my account in calls that expire next week. And if I am, then what am I going to do? I'm going to have a much, much, much tighter stop. If I'm going to play it aggressively, I can't sit through an $8 pullback. So maybe I anchored to a 15-minute 21. I'm trying to see it go higher from the daily squeeze, but if I want to manage my risk, maybe I buy it above the 15-minute 21 and I dump it below the 15-minute 21. Then I could take 5, 10 little paper cuts. If I catch the move I'm looking for, could be profitable. So I think anytime we're more than 1.5 to 2 ATR above the buy zone, you want to make a few adjustments as far as that trade, just in case it pulls back a bit. Toro Joe's got some DraftKings and looking for an entry in FLUT. I think I heard Henry talking about some DraftKings. The Gamble Man. All right, DraftKings. These bigger levels can always be tough. A lot of fighting at a big level. But I think for a long on DraftKings, you've got a pretty clear level to break here. One, maybe two closes back above that daily 200 should help the Bulls get a little more going here. Think of it like this. If anybody is shorting DraftKings back here, would it be a very typical retail trader kind of exit or a stop rather? Well, I'm going to short it below the 200 SMA and I'll put my stop order above the 200. Now, I've got no idea if that's actually the case, but if it is the case, if they can get pumping through that $39.40, any shorts might get squeezed out there. So that is the level to watch. All right, NQ hanging around here. Little green in the S&Ps. Quiet futures for the most part. To be expected. MEM, what is a white dot? So on my big three indicator, when I get the white dot on the chart, that means I'm checking off every box I have. As it relates to what I think is the ideal squeeze. Let me see, drawing tool. Right, so I have my, all my trend criteria. Is the trend bullish? Is it bearish? Is it neutral? I have the structure criteria. Is the structure of the chart bullish, bearish, or neutral? And then momentum. And then the squeeze. So take Netflix, for example. I'm getting the white dot here because I've got my squeeze. It checks off all my momentum criteria. It checks off all my structure criteria. And it checks off all my trend criteria. I found when that all comes together, the odds favor a nice move to the upside. So if we jump back to IWM, for example, and the beautiful thing is I don't really care too much what's missing. Is it a stacked EMAs thing? Is it a MACD thing? Is it a direction of the 50 SMA kind of thing? I don't care too much what's missing. More so, all right, big weekly squeeze here on IWM. I don't get my white dot until this week. Meaning all throughout back there, I don't care too much for that weekly squeeze. Something's been missing. Now I've got the white dot. Now I can go check off all four of those boxes. Take it through my trend checklist, take it through the structure checklist. And we got the full shebang. Which, as we know, never means it's a guaranteed paycheck. What that means to me is if my next 100 daily squeeze trades look like Netflix, I only have one job. Good entries, good exits. Right? But if they all look like that, I'm going to be in really good shape. All right, let me jump over here to YouTube, do a few more questions, and then I shall jump into my room. Netflix, a little quiet. Tesla. Tesla's bumping into 230 for the 800th time in the last week. All right, we are good on YouTube. Yep, Jeff, my pleasure. My pleasure. Toro Joe, you got DraftKings at 34.25. Oh, nice. Yeah, nice. So here's what I like about the entry. You've got a little breathing room. Notice on your daily chart for the first time since April, 21 EMA crosses back above the 50. Now, that alone doesn't guarantee, here comes a rally of the century. What I think it does mean is for the first time in 5 or 6 months, structure on the daily chart a little more supportive of a push higher. Meaning in the event they reject it here at the 200, and you do get a quick flush down to 36-ish, should be a spot for support. I'm kind of looking at the QQQ, trying to see if we can get the same thing. All right, pump that daily chart. If they can cross the 21 above the 50, then I think they can handle the dip a little better. Notice back here, guys, nice push, nice push. 21 never gets back above the 50. Then we pull back a bit. We're not pulling back into good structure. Everything just kind of falls apart. Where if the SPX were to pull back a bit, could of course fall apart. 21 back above the 50, momentum back above 0. Things that points towards much better chance they can handle a decent dip. I think a little bit of that going on for that DraftKings. Well, all right, folks. Happy Wednesday. Happy Fed Day as always. Thank you for being here. Appreciate your time. For those of you in my room, 9/11. Yeah, I'm gonna go heat up my coffee, do a quick stretch, get in the zone, and then I'll see you in our room in a few minutes. For those of you in the Essentials room, I'll be in there at 11:30 Central. Adios, guys.